It's been a crazy week for most stocks. The Nasdaq is down 3.5% on the week. You have many different ones, especially on Wednesday. Apple down 3%, Nvidia 5%, Google 5%, Tesla 10%, Amazon 2.5%. It's been a crazy week for the big stocks, many different things. And of course, as soon as the stock market starts going down, you start to see the stock market crash videos, how Buffett is selling stocks, and how you should be worried, how the world's gonna end, that your portfolio is going down, you should take some cash or do whatever or prepare for a stock market crash as soon as the stock market goes down. This is the kind of videos we see every single time on X. We see charts like this one comparing whatever market 2023, 2024 to a previous market crash because it causes drama and drama causes fear and all these things. And you start getting that stuff, and maybe some people start to panic. Maybe some people start to worry. Maybe some people, they stop buying the dips because they believe we're gonna go lower because everything has peaked and all these kind of things. And this is possible. It's very, very possible. But I personally disagree with this thesis, and I don't believe this is what's going to happen. And yes, we might have had some kind of a market crash start, or maybe just a very bad week for most stocks. But it hasn't been a bad week for me personally. I'm actually up 0.5% on the week. Why? Because I don't talk about what's happening right now on YouTube. I don't talk about the news. I talk about what could potentially happen in the future and what I'm trying to do about it. I discussed it in this one, why the stock market will likely crash in 6 months. I talked about the rotation out of the Magnificent 7 or 8 before it became mainstream, before CNBC talked about it, before most people even talked about it. And I got no credit for it, but I'm fine because I'm just putting my money where my mouth is. And then I told you here, all in, revealing my low risk, high return, which is being 95% outside the big 7. And this is why my strategy has been working, and this is why I held up a little bit better. And even though I might be wrong, and I'm leaving my open to be wrong, my thesis to be wrong, I don't care. I'm just gonna say, what I believe will happen. And I personally don't believe this is a crash. I don't believe this is the end. I don't believe things are gonna happen. I believe there's a crash, but I don't believe the crash is in 2024. I believe the crash is 6 months from now, which is mainly into mid 2025. I'm starting to get bullish from here. I'm getting excited. I'm finding deals. I'm liking a lot of things. And I'm going to tell you why. I'm going to tell you what I'm doing exactly right now in my own personal portfolio. Okay. Now, to get started, I'm just going to talk about this rotation thesis, which to me it's crazy that most people still have no clue what's happening, no clue why it's actually happening. Like even on CNBC, they're saying that this is happening because the market is expecting Trump to win. There's nowhere close to that. And I talked about it. The main reason this is happening is because as soon as we had a negative CPI print, investors started expecting lower interest rates. Because they started expecting lower interest rates, they sold stocks that did well with high interest rates like the Big 7, and they started buying Russell 2000 stocks, dividend stocks, REITs. Many of them we talked about, they've been doing amazingly well. And other people said this is a flight to safety. If this was a flight to safety, the Russell wouldn't be going up. This is mainly a bet on lower interest rates. And it's very important for us to understand why this is happening, for us to try to guess of what could potentially happen in the future. This is not me trying to time the market. I'm never 100% out, but I have a small percentage of my portfolios that I put in certain things to try to benefit from that stuff and amplify my returns. Okay. But as I said, as soon as the market goes down, you're going to start seeing a lot of that stuff. It's like actual, real, valid, fundamental reasons of why we're going to have a recession. But it only becomes valid because the market went down. This is very important. For example, this one about trucking unemployment or employment, it's been declining since 2023. Now, if you got freaked out over this chart in 2023 because we're going to have a recession, imagine how many amazing gainers you missed out on. So this indicators tell me nothing, but it did get 2.5 or 2,500 likes. Why? Only because the market went down. And this is what the narrative becomes. When the market goes down, the narrative becomes like we're going to have a crash. But 2 weeks ago, 4 weeks ago, no one was talking about this. Everyone was carried away with how amazing the market's doing and how much the year to date is up. But this is what you have to do in the market. You have to do most of the opposite of what other people believe. People believe in the crash when the market goes down, and it's very unlikely for the market to crash if most people believe we're going to have a crash. And this is what I said on my Twitter. I said, everyone wants a pullback, until a pullback shows up. And when it does show up, then they say, I'm not buying because we're going lower. This is what you have to understand is whenever people start believing in that stuff, and I believe most people haven't bought the dip on in Wednesday because a lot of the stocks went down so much, they believe we're going lower. That means we're not going to go much lower. And this is how I look at it, and this is how I do certain things. But there's two reasons, or maybe three reasons, of why I believe this crash is not going to happen right now in 2024. Okay, and I'm gonna go straight into the first one. The first one is the yield curve. And this is the 10-year minus 3 months. So everyone is talking about an inverted yield curve, how the yield curve is negative, and that means we're going to have a recession, and that means we're going to have a stock market crash. Yes, but the yield curve has been negative since 2023. Actually, since late 2022, on the right at the bottom. Imagine the amazing gains you missed if you just sold stocks because the yield curve was inverted. But the actual bad stuff, the recession and the market crash, they happened after the yield curve has turned positive. This is what happened in 2008. This is what happened in 2000. This is what happened before 2000 in 1989. When it turns positive, we have a recession, which is a shaded gray area, and then we have something great, systemic risk stuff happen when it actually goes positive. But not right now, it's nowhere close to actually turning positive. It's still deeply inverted, very, very negative. And for me personally, I believe the crash is not going to happen before it turns positive, and it has been accurate 100% of the time. And that's more into 2025. This is why I made the video, the market will crash in 6 months or after 6 months, not right now, after 6 months in 2025. So this is one of the best indicators you will see that doesn't only tell you that a crash could happen, but it could actually tell you when it could happen, because when is more important than why. There's all kind of reasons of why the market will crash, and they've been valid for months, but they only get attention now because the market is going down. And this is why you have to have independent thinking and not just follow whatever the narrative is and then look for confirmation bias for you to miss out on amazing buying opportunities. But something else that I'm saying is investors are getting very bearish on the big seven. And this is the main argument I got is they're nowhere close to being bearish. These stocks are up so much. How come could you say people are bearish on them? They have much lower to go. Well, I agree. And I talked about this before most of you are talking about it. But I believe there's a lot of pessimism around the big seven. You could look at the call volume. The call volume is, I think, as low as it was in January of 2023, which was near a bottom for a lot of the big seven. So investors got bearish on them too quickly. And it doesn't need, to be bearish on them for years and years. They got bearish on them too quickly. And then you have a lot of them, they haven't reported earnings yet. Tesla did miss, of course, but I think it was expected. Google, which is Alphabet, did very well on earnings. And for me personally, this is an amazing setup because we're going down into earnings. Meta went down 9% on the months. Not because it's reported bad earnings. It hasn't reported earnings, just because of the rotation and because investors are being a little bit worried. Same thing with Amazon, same thing with others. And this is a better setup going into earnings. If the stock are going down into earnings than if they're going up and everything is well, there's a little bit less room for disappointment. And some of the estimates started to come down over the last week or so. And this is very, very good. So in terms of a setup, the setup is getting much, much better. The yield curve is telling us that nothing is likely going to happen before mid-2025. And if I want to sum up my thesis in one sentence or in one paragraph, and then I'm going to tell you what I'm doing in my portfolio, is I believe this is just a rotation, just a small pullback. And the Dow is catching up. The Russell 2000 are catching up. The big seven aren't going to keep going down forever because they went down too fast, too quickly. I believe the big seven, they're going to go a little bit lower, but it's nothing crazy. They're not going to go down to 2022 levels. And I believe this little pullback is nearing the end. And I see a September rate cut as something that's bullish for stocks because they can expect more rate cuts. This is a catalyst. And I see it happening, and I see stocks going up into 2025 all together, not just the Russell, not just the Dow stocks, all together. Because once we had crashes before in 2020, 2022, 2008, everything was going up together, and everything pretty much went down together. And now we don't have this case. If we're going to have a crash, the Dow has to crash. But the Dow stocks are so cheap, they're just not going to crash. I mean, I'm not seeing it. I'm not saying McDonald's crashing down or NOC or a lot of the other stocks. So that's what I see happening. I see stocks going up on expectations of lower interest rates from a rate cut, and then they go all together into 2025. And then big tech earnings would have peaked now in 2024. 2025, the recession is getting worse, and they would have peaked already. We're already cutting interest rates. There's nothing to be excited about. This is when the crash will happen, when most people wouldn't be expecting it, but now more people are expecting it. And this is not how, or this is not when the stock market will crash. And if we do have a 5% bounce on Nasdaq in the next 2 weeks, trust me, you're gonna see all kind of videos of why we're going to 7,000, because most people, they follow price action. They don't actually follow their own intuition or what they believe will happen. But what I believe will happen is, I told you what it is. I think when I go into 2025, rally all together, and then this is when the crash will happen, most likely in 2025. Now, this is what I'm doing in my portfolio. I had stocks that I talked about on YouTube, like NOC. It's up 10.5% on the week. It saved my ass this week. Pepsi is up 2%. McDonald's doing well. I own all those stocks. I also own stocks that haven't been doing well. Like I talked about Ulta Beauty, it got killed, but it's only a small percentage of my portfolio. It's not my entire one. Most of it is me putting my money where my mouth is in the rotation before most people even talked about it. And that's what I did. And these stocks are up a lot. And I'm starting to get very bullish on the big stocks like Visa. I like Amazon. I like Meta. I like a lot of the big seven, because people are starting to hate on them and they're getting better valued. And this is what I look for. I look for things people hate. When I love them, I sell them and I move on. That's what I do. And I'm starting to open small positions in some of the big stocks and some of the Magnificent Seven stocks, because this is what I believe will happen. I told you, I think it's nearing the end, and we're going to go into 2025, and we might even make a new high. I wouldn't be surprised at all, because most people aren't actually expecting it, and this is what tends to happen in the market. So I'm selling some of those stocks that I'm up on, some of the Pepsi, trimming some other stocks, and I'm starting to buy the stocks that have been going down, Magnificent Seven, and other kind of stocks that I like in terms of mega cap stocks, and many others. I don't believe the small caps are going to go down. I think the small cap rally is only getting started, but the large caps are soon going to follow the small caps in 2025, and then everything could crash in mid or late 2025, like I talked about in this video of why the stock market will likely crash in 6 months. And by me talking about all those things, I'm opening myself up to being wrong, to being judged, to being made fun of. But I don't care, because this is how I make money in the market. I don't make money by posting things of what's happening right now, posting things that everyone knows. I post things that most people don't know and most people aren't expecting, and I bet on it, and that's how I make money. And for me personally, that's what I'm betting on. That's what I bet on before on the rotation, and I got no credit for it on YouTube, nothing at all. And now I'm betting on the opposite again. And that's what I believe will happen. And I'm going to update you. And if I'm wrong, then I'm wrong. But at least I'm doing things to make money, not just to get views or whatever. And I'm sharing with you what I'm doing. And that's what I do. And if you want more details, I share exactly what I buy and sell and everything in my own investment group. This is the link if you're interested. But thank you again. Not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.